Hello, ladies and gentlemen. Welcome to the Coach's Playbook for October. I got that damn train going by me again, and I know only I can hear it, but
I heard it
man,
that time.
perfect. Well, got the
First
sensitive
time I've
mic
ever
too.
heard it, I think.
Yeah, well, it actually ties into what we're going to talk about today, in that we're talking about catching falling knives, which is also standing in front of that train. Boom. But first, Mick, I was thinking maybe, do you have any trader shouts today, or?
Oh, you know what? I kind of forgot about that before we started filming. Hold on one second. Easy enough to pull up. Yeah, Juan Carlos Weiss up over $1,000 today. Andrew Anand over $1,000 as well. So a couple good trading days right there.
I had a
Great.
couple from yesterday too that's worth mentioning. Brent S. Like $4,800 yesterday trading the
Woo,
Nasdaq. Got that big move to the downside, so
nice.
he learned how to just follow the falling knife instead of trying to catch it.
That's Brett.
Brent,
Yeah, so in that spirit, I thought today we could talk a little bit about this because one thing that we've noticed in funded accounts, the traders that are trading in them, is whenever we have a big move, and it's been a while since we had a big down move like yesterday, where I think at the lows the SPOs were off what, like 95. So that anything like that counts as a big move. We see a lot of people get into trouble trying to fade moves like that, especially to the downside. And I was thinking we can kind of talk a little bit today about the thought process for what to be thinking about on these days where you have a huge move in one direction. So, Hogue, as our senior leader, maybe you could lead us off here.
Well, it is probably one of the biggest and most consistent mistakes made by traders is when the market becomes directional in either direction, thinking that we're going to be able to pick the high or pick the low. It is very tempting to do. It's the cheapest price of the day, but it is, like you said, kind of getting run over by a train or trying to catch a falling knife. 99 times out of 100, we're going to get cut. I say it on the forecast quite often when the market is already directional at 8 o'clock in the morning. Don't fight it. If you've missed your opportunity to get in it, see if you can find a pullback to get in it, although directional markets do try to keep you out.
Mm-hmm.
The worst thing you can do though is to just trying to start to pick bottoms because as a lot of traders found out yesterday, it's just about the time that you run out of money when the low is going to come in and the market's going to turn around. And it just the way it did yesterday in the S&Ps and the Nasdaq, it always looks worst at the bottom, and it's that thinking we're going to be able to pick the bottom that is so detrimental to traders. It's if you're going to miss the move, go ahead and miss the move. You're not going to find the bottom until there's some sort of structure to lean on, whether it's in the past or in the day time frame. Be patient. Make sure you give yourself the opportunity to lean on something to limit your risk. Anytime you're fighting a directional market, there's no risk limitation that's available for you. Don't do it.
Yeah. I wish JD were here today, John Doherty, with his lovely musical Chicago accent to do his bit about if I liked it at 5, I love it at 4. And if I love it at
Yes.
4, I love it at
Yes.
3. And I'm gonna buy all the 2s you can give me.
I
That's
gotta
what
tell you,
happens when you start doing it.
and I tell you, I saw a lot of traders just get completely beat up in the trading pits by doing just that. Yeah, I bought it at 8, and I love it at 6, and I really like it at 4, and now I'm puking out at 0. So you see it happen enough. It's happened to all of us. It's happened to me. I
Sure.
know it's happened to all you guys. But eventually you're going to stop putting your hand on the hot stove because it hurts.
Mm-hmm.
Yeah. Dan, you got anything to add?
yeah, I'm just thinking this. A couple weeks ago, I think it was that we talked about kind of trading within a trend. We talked kind of around that subject of, look, you cannot pick that bottom. Maybe once in your career, you're going to pick a bottom, and you're going to remember that every time. I can tell you, I did it in crude oil a few years back to the tick, and I remember it. And
You're a genius.
Yeah, you know
right,
who else remembers it is the person that sold it to you.
right,
Yes.
right, and you think about that stuff, but you cannot allow that to be in your thought process when you're trading. You know, the market is never going to react the same. You know, if you're in the kitchen, yesterday I was in the kitchen, I was slicing up an avocado, and my dog hit me and I dropped my knife. And the instinct was step back. Don't let that hit your foot. The same thing in trading. If you see that knife falling, step back. Don't let it hit your foot because it's going to hurt. The same concepts kind of applied. Try and keep that same thought process when you see these markets getting directional like that.
Yeah, I think what makes it difficult, I think this really gets down into some hardcore trading psychology of these financial instruments being a little bit different than, it's a very natural human thing to be looking for deals or see when something's expensive. If something's expensive, we want to sell it. If something's relatively cheap, we want to buy it. Just because if it's, I don't know, if it's a pair of shoes or a car or something, you're like, oh, that's just a great deal. But there's other forces at play here. Especially say we talk about equities, like equity futures. There's a lot of reinforcing things that will actually accelerate downward moves. Lots of big people need to hedge their positions and options positions and get delta hedged. Things like this can keep on going. And if you see, I'm just using the ES as an example. If the ES is down, where would you guys like put it as like a big day down? I say anything like beyond 50, 60. Well, once it gets down 50, 60 points, there's no reason that it can't go to 80 just like that. There's no reason it can't go to 120 just like that. It's just you don't have the sort of information necessary to be in there just picking bottoms like that.
Yeah, that's a great point, Jack. Couple great points there. I mean, as traders, you want to find good value, and you make your money catching a directional move. If something's going up, you do want to be buying things on a pullback, but you also don't want to be have the mindset that, oh, we're down 50 points, we're down pretty good, this is good value. Because like Jack said, it could go another 50 points from there. I don't think that buying things just to say, hey, we're down on the day, it's cheap, good value, is a good enough reason to get in front of any falling knife or any falling market. I think you need to, you could buy a market as it's going down, but you need to have a reason why you're buying it. If you're looking at a market profile or a high volume node, you could assume that, hey, maybe there's going to be some support here. Have a reason for getting in. It should be based off of a level or some indicators, something that you're looking at. You don't just buy it as it's falling for no reason and say that, hey, this is inexpensive. Other than a high volume node, you could buy something as it's moving back to a moving average potentially, or a previous swing low. We know that swing lows are important price points. You could maybe buy something that's going down when it gets to a previous swing low level, with the assumption that, hey, we might just test this swing low and then pop back up. But at the same time, you could, take out a swing low and see acceleration further to the downside. So there's a couple reasons why you could do that, but you don't want to blindly just be buying them. It can always go a lot further.
You don't want to be stubborn, right? I mean, of course, you can buy things that are going down if you, as you said, Mick, you have a level, a volume node, but then don't let it go through you and keep adding. That's where the trouble summons.
Yeah,
It's Halloween, a spooky trading mist when you start adding to things that are falling like that.
Yeah, and something to think about too is when we say, whenever the term falling knives come into play, I think of it too, like we're dropping. If it's moving higher, it's the same concept. Flip that chart over and it's developing and it shows the exact same thing as a falling knife. Keep that mindset too if we're going higher. We have, I think you've heard Jack say this about 1,000 times across all of our content over the last month, that we're entering into the most known high volatility point we'll ever see. That we know it's coming with elections 1 week from today, that we're going to see, and I don't care who wins, we're going to see that knife flying in one direction, the other, or both at the same, we're going to see it. It's inevitable.
Having a knife fight.
We are. You have to be careful.
I'll bring the gun.
Right? Just want to say hello to everyone so far in the comment section. DJ Felix, level 2. He got whipped around a little bit yesterday, but he figured it back out. Tanya, Bait Corkill, and Rob, good to see all of you guys. Drop your questions in as we go too, or thoughts that you have on the topic.
Yeah, and I want to know if DJ Felix is a DJ or if he is just named DJ.
No, it's DJ R's and Felix Escobar.
Okay, cool. Well, we interviewed a DJ this morning, so I was just kind of... Well, as Dan mentioned, we got today's Tuesday. 1 week from today, we go into this period of what the option markets and everything else is telling. I mean, like the VIX is still high right now, given everything else that's been sort of improving in the economy. Everything's sitting pretty nice for like how kind of, for lack of a better word, shitty everything is kind of right now.
Yeah.
I was expecting bigger volatility last night during the Senate vote for Amy Coney Barrett. I was expecting more than we got.
Partisanship is such a strong drug, Dad. There's just no way, like, not one person was going to price it. Someone just being like, oh, you know what? No.
Right. Right.
Yeah. So, but we got more of it coming up. So, like, I think that's the most important. We'll be sending out an email and stuff soon about just how important it is to mind your risk and kind of be prepared for whatever comes in the next week. But we thought this is a good, like, a moose boost, as they say on Top Chef, into staying out of the way of something that's going to run you over.
Right. If you don't know what's happening, you have no reason being involved. Take your time.
Yeah.
Especially all day, early next week, end of this week, things are going to look different. They're not going to be that normal, when we see high volatility, we've all gotten pretty good at it here this year because this year has just been like pure high volatility. You can see it coming, but you cannot be prepared for what this next week into, even a couple of days after the election next week can bring.
Yeah.
And if you've never really traded in extreme volatility before, there's going to be a lot to learn from it, but try and keep those lessons cheap because volatility can kill. A couple of my favorite quotes, Jack, you were talking about, sometimes when the market's moving lower, it actually snowballs. Selling can beget more selling. That's a direct quote from Jim Dalton. And as my dad always used to say, the market always looks the best at the top and the worst at the bottom.
That's good advice. Yeah, especially, you start getting those margin calls, things can really start tumbling. But
right, remember we got new limits in the S&Ps in the overnight session too that we got to be cautious about. There's dynamic stops now that are going to be involved. There's a lot that's involved now. The last thing you want to do is get stuck in something and have it go against you. Just everything we have ever said about managing your risk, trading small, being smart, apply that. Just apply it. Do it.
Speaking of our year-end sort of volatility roundup here, I was just thinking, we're talking about all this volatility right now. I remember at the beginning of this year, Dan, I think that we were having a conversation about the VIX, which was, I don't know, at 15 or something at the time, somewhere around there, and just being like, man, wouldn't it be great if we can get a little bit more volatility? And I swear to God, it's like one of those monkey paw situations where we have been cursed with just the worst year ever because we demanded more volatility.
Right. Hey, Mick, we got a question here about funded accounts. I'm just asking, will funded accounts be allowed to trade on election night?
It's a great question. No, they will not. We're going to be sending out an email Friday and Monday reiterating this, but there will be no trading in funded accounts, premium funded accounts, the evening of election night. So after 3:10 p.m. Central Time on Monday until, on Tuesday. So Tuesday after the stock markets close, no trading until 8:30 the following morning. So you can resume trading when the stock market opens on Wednesday morning after the election. That's all going to be, that resuming of trading is going to be pending price action and volatility. It's a great question. We know that anything can happen in these sessions. So we want to, keep your funded account safe, keep us safe. So no trading during election night. And when we do turn trading back on, we'll let everybody know, all the funded accounts, via email. And if we're going to further prevent people in their funded accounts from trading after Wednesday morning at 8:30 a.m. Central Time, we will also let you know too. We just need to see how these markets trade after election evening.
Yeah, Numa here has got a great idea. He just got his pro account today, And he's going to take it really easy the next couple of weeks for sure. And I think that's a great idea. I think everyone in those situations, if you're trading, definitely take it easy.
Yeah, anything can happen. And one last point as we're talking about falling knives, trading against the trend. It's always good in high volatility environments to sit on your hands. It's really tough, even just a one lot in the S&Ps, in volatility, we could have, 20-point swings over, the course of a couple 5-minute bars on the chart. And you can't time things well doing that when we see
Not
that
at all.
market action.
John, you've got a question here. And maybe this is something you could do on the forecast, but Jose wants to know if you would be able to analyze possibly the volume profile rejection zones for an inside day like today. Maybe that's something you could do one of these days.
Absolutely. It sounds like a great idea, Jose. Look forward to touching on that. And don't forget the group coaching that is available for everybody tomorrow at 1:00. So that may be something we can look at then. Send me an email.
Great
Jose.
idea. Great idea.
Mhm.
And we have one other question here. How do we get one of those beautiful Top Step hats? I can say I know there's something in the works for a store to be opening up soon. So hopefully that gets going soon and everyone can get access to some of this stuff.
Are we at the point where we can start teasing things?
Sure.
Sure. Expect some big changes coming down as far as our swag and what have you.
Absolutely. Got some cool stuff coming.
Yeah.
Awesome.
Well,
Awesome. Well, thanks for all the questions, guys.
Yeah. And thanks everyone for tuning in today. Hope you all stay safe and warm, at least in Chicago. It's cold as heck out right now.
Yeah.
2 days,
Yeah,
straight days
it's-
of, like flurries.
It's chilly up here in Wisconsin. We didn't get snow today, though.
Well, count yourself lucky. Anyway, Dan, did you grab a quote for us today?
I did.
Onto abyss.
I did. I purposely kept saying the word patience because patience is not the ability to wait, but the ability to keep a good attitude while waiting. I know, and this comes from Joyce Meyer. I like this one really because you hear a lot of people talking about the FOMO when markets start moving like crazy. And if you can kind of keep that positive attitude, like, hey, it's just not my time just yet. My time will come. I think that can help with the FOMO.
Awesome.
Excellent. All right. Well, that's all we got for this week. Ho, making your triumphant return. Will you
Yes.
sign us off?
Yes. All right. Well, get out there and profit, trade well. You know you deserve it. Get out there and make some money.